Hello, hello, and welcome to February 5th. Alpha's lead Nike 66%. Let's look at those charts. There they are. Nike 66% in the Alpha account, and we are out of the penalty box. Yes, take a look at that. We have our three. We're now back to three on our pattern day trader count. Now, that does not mean that we're going to go back to our original planning of going with the uh, last bar low or the third 3-to-1 ratio initial day. We are going to stick with that far away rule for initial entry, and then so rule set it for accounts under 25,000. Set your stop way down here somewhere where like never gonna know the possibilities are so negligible, and you are allowed three. I mean, you're allowed three per 5 days, so we don't also do not go into a panic mode or fear mode. All right, that said, with Nike at 66%, and we are past the third ratio right there. We closed again, talking too fast, sorry. We are past our third ratio. Our exit pattern is there's only two exits now available to us in this zone. One is the dip. We are waiting for the dip. The dip is going to occur in here somewhere. And when it does, that low point will then become the exit for the 3-to-1 ratio. Unless we get the 100% ROI. I still will hold to the 100% ROI. And the reason why is that it's highly suggested by a lot of traders that you're 100% ROI on a trade. Why chance it? You know, you say, oh, I got 100%. Let me go to 200%. Let me go to 500%. Those occasions happen. I have a nice one for 300 and something percent on save as a put back in March when we had the pandemic crash, but it doesn't happen every day. So you got to be consistent, and you got to be to take that money off the table because the next person next to you is going to. Remember, trading is poker. Put the ante and the money into the pot, and the first person to grab it is the one who wins. Portfolio managers are going to be eyeing this. Look, we're at 130. Let's go ahead and do something here. 130. What are the portfolio managers' exits? I can tell you with a good grade of probability, round off to $130 times 120. Their exit is 156. So somewhere around here, the portfolio managers are going to start looking at this very seriously and taking money off the table. That's how they make their money throughout the year. They keep taking it off. And also, too, remember at the end of the month, they got to generate cash. If those pension checks stop, the seniors, retiree community economics will collapse without those checks. So, so they look for 156. Let's go ahead and draw a line in the sand. 156. We'll go here. We're going to go and edit this. We're going to say this portfolio exit and 156. So we're going to say that it'll probably reach it maybe by March 1st. It's just a line. It's just a line in the sand. It's just to let us know what we're looking for into the future. Ourselves, like I said before, we're going to be looking for the dip. Comes up, goes into a dip. That bottom dip will then become the out for the trade. Okay, going on now to American Express at 36%. American Express. What's really cool too about the 3-to-1 ratio, it's a little less stressful in this regard. You don't have to keep moving the stop. Once the stop is done, it's done. It sits there, excuse me, until you get past the 3-to-1 ratio, and then you're going to start looking for exactly this. You're looking for the pullback. This is called a pullback. It pulls back and then comes back up again. That's what we're looking for. Once we get that, then we'll be looking to putting in our stop. But this has to get past 3-to-1 first. So rule number one on the exit, price must close above the 3-to-1. Rule number 2, look for the pullback to set a out. And this is for calls. It works the opposite for the highs. When we go into puts, I'll explain it again in the puts so we can see it much clearer and visually. And then 100% ROI. Get the 100% ROI. Put in the last bar low. Don't wait on it. Take that money off the table. If it owes you money, be able to get it paid back. If it doesn't owe you money, then it's pure profit. Move on. All right, XLE is running here. XLE is here. We have 50. It should be 57. There's 57 lost leaders. So let me go ahead and correct that now. Okay. And this is now this XLE is playing for OAS. OAS is a penny stock trade that I got into. Didn't go well. It lost $609. Now, whatever profit this trade makes, it comes off the 609, and the XLE4 will be still playing for OAS until that is paid back. So there we are with XG taking us now down to Bank of America. And Bank of America, same situation. We're not near our third ratio, so we just sit here and wait for it. PGR. And PGR is going up. Now, if it comes back down, comes through here and busts through, that's one loss. And then TJ Maxx. So let's review something also too while we're here. And that is the laws of probability. The law of probability is that if we have 9 positions, which is perfect. 3 are going to make us big money. 3 are going to lose us money. And 3 in the middle are going to be about plus or minus 5-10%. It depends where that cookie crumbles. But the bottom line is that we are in good probability. We are in good neighborhood on that. Also notice too, the account is moved up from the plateau of 4,400 the last few days. So this is a nice turnaround. And we are in the new Elvis shift. We're in the new Elvis shift this week. This is the day 5. And that's we're using the 3-to-1 ratio setup for the Elvis shift. Still using the stochastic strategy. The stochastic strategy, it comes down, and when you have an uptick, that's correspondent with the RSI, and in the histogram is in the green zone. Then you go to the top or the top of the body or the top of the candle, whichever you prefer. The conservative trader will go to the top of the candle. The risk taker will go to the top of the body, and then your stop would be maybe if you're using price channel, would be one, or this dip. This is a beautiful right here. This is a beautiful. Now remember, on TJ Maxx we did have a trade. This trade was set up right in here. It got triggered here, and then we got stopped out because I made a mistake of putting in the less than $6,340, and the computer says, "Hey, this price is less than $6,340. You're out." So I messed up on the order ticket by not putting in the decimal in the right place. That pretty much does sum it up. Binary options is still in the hole, and we haven't really found a good footing in binary options at this time to really get into. We can go and peek at it. Give you a peek. There it is, right there. There's binary options in operation. There's my bank, and we are underwater approximately about $350 thereabouts. We got into 17,187, and we're at 16,818. And that pretty much we're going to get into this when we start seeing some solidarity about what we might be trading. And with that said, we're going to close off with today's report. Losers become winners with Alpha's Nike 66%. And I thank you very much for stopping by and checking it out.